All right, now to talk more broadly about the current deal-making environment and what to expect going forward, let's bring in Herb Greenberg, editor of Herb Greenberg on the Street at Substack and a CNBC contributor, and Dan Primack is business editor at Axios. Herb, what do you think of all these deals?
I think, it's interesting looking at just at a chart here from S&P that we're at a period where this has been, from a big deal standpoint, even though the headlines are hitting today, this has been a horrific year. There's just been, if you look at this compared to going all the way back to 2018, you don't see much. So what you're seeing now, and I think somebody mentioned it earlier, you have the end of the year push, but you also have a situation where, think about it, you have interest rates that are ridiculously high levels for some of these people who want to use cash or want to get debt. And you have a very volatile market, and you have an economy that's totally unsustainable. But I do think there's going to be some potential opportunity and interesting moves possibly in 2024.
So these deals that we're seeing here are sort of opportunistic in your view?
Absolutely, 100%, because each one is very different. And you can even see with the Cigna deal, which is really interesting, with them pulling out of the deal, that, shareholders and companies that are being approached of companies that have cash are basically saying, hey, wait a second. There's opportunity not to merge. And in this case with Cigna, it's clear, use the money for something else. Give it back to shareholders. Share repurchases, which is what they're trying to do. Anything but selling at what the shareholders perceive to be perhaps a not great price.
Yeah, I mean, you say this is the big story. If you've got discretionary cash, use it. Use it prudently to invest in the business or do buybacks and dividends and so forth. And that's what, indeed, they seem ready to do. This deal might not have even made it through antitrust scrutiny. Mightn't it not have, Herb?
What deal is going to make it through antitrust scrutiny right now? Yeah. I mean, that's the big issue. Obviously, that was, any of these big deals, that's what's getting in the way. But look, I think one of the interesting things is when you look at this from a balance sheet perspective, there's a great stat out there that in net interest payments by corporations are at their lowest levels since the 1970s. That's because of all the big refinancing, right, that we had early on when cash was free. But now you've got this mix of companies that look good and other companies that, even if they refinanced, are financially fragile. And that's where I think you may see some of the opportunity going forward, is some of those companies are parsed because they can only go so far. Some are going to have to refinance. Will they sell out? Are they not worth it? I think that's where the opportunity and the story is going to be going forward.
Yeah. Dan, pick up on any angle that Herb just mentioned or any other that comes to mind here. Why are we, do you agree, for example, that these are opportunistic deals? I mean, when would a...
Okay, so yes, they are. I mean, I will say the energy one, the Permian Basin one, that's part of a trend we've seen all year. Right. We've had a record number of deals like this. We've got oil companies who are basically trying to grab up all the best and last kind of available resource land that exists. In general, it's interesting. Herb mentioned, and he's right, that if you look at the S&P numbers for the year 2023, overall M&A is down. Big, kind of mega market M&A is down kind of, and overall it's, I think, 22% below last year. That said, it's been pretty strong over the second half of 23. It's kind of been a little bit of a tale of 2 years. Again, I don't think there's been anything kind of from a sector perspective that's been driving it. It's been, as you say, opportunistic. But there have been a number of decent-sized deals and overall activity kind of ever since the Fed started to signal it was done hiking rates.
Yeah. What are your initial reactions to the Macys, Dan, Macys offer?
Two things. One, that is one sector we have seen relatively little in, which is kind of big retail. I mean, the thing that jumped out to me was kind of how this thing hit the press and kind of the original journal story, which said, well, if we can get into the diligence room, we could potentially raise the price. So your past guest who said this is a low price, it seemed like that was very much an opening bid from these prospective buyers. They want to be able to get more information and they're willing to go higher.